Good afternoon, everyone. Yeah, so today is the day for the non-farm payrolls. Our main event for today is the non-farm payrolls, and we're going to look at it in detail and see what has been happening over the past few months. And you'll know what to expect in a time like this. The war is still going on. When these events delay, sometimes they are normally forgotten. Many traders have now forgotten about the war. They're looking at the charts and they're thinking that everything is back to normal. But the war is still going on. Fuel prices are still being affected. If you've been looking closely, our fuel prices have started going up a little bit. So it could be because of a million reasons. It could be because the sun is very hot. It could be because the oceans are not moving fast enough. It could be because of the war in Ukraine. Anything can cause prices to go up or down. Or maybe some guy at the border just wants to eat more money or something, so they've increased the prices. But right now, all we know is that there's a war going on, and this is from a major oil supplier, that country, Russia. Very, very main oil supplier. And if Russia is not giving out its oil right now because of the war, that means that we're going to have some prices moving up. So that could be the reason that this oil, that oil prices here are moving upwards. It could be that, or it could be because the moon is somehow far away from the earth. Anything can cause prices to go up. It can be one of a million reasons. So today the non-farm payrolls, looking at the figures, the expected figure and the previous figure. This event will be at 4:30. So the previous figure is 467K. Then the expected figure is 400K. So that is a very big reduction by just 67K. And so it could turn out to be worse than the previous. But if you're looking at charts like Euro USD, Gbp Usd, they have been very bearish because of that disturbance in Europe, and that could continue, especially with this. So the prices could continue moving downwards. So this event could push prices far below. If they are not, if they come out as as expected. So before we get to that, in about 43 minutes, there's going to be the retail sales affecting the euro. That is one of the two events that are there in 43 minutes. This one here, there's a lot of the anticipation is so big. Previous figure is 2%. The expected figure is 9.1%. That's a very big increment, and that is year over year. For Europe. Then retail sales. This one is month over month. Previous figure -3%, and the consensus is 1.3%. That's a very big move expected for this event. So by all means, we're going to have some good volatility here affecting the euro. If we just take a quick look at the Euro USD, that's what it looks like right now. So yesterday it was a bit bearish. It was it was quite bearish, and we're looking at prices moving to another low point down there. This was the last time that the last event that we looked at was this. There was some divergence there in the 1 hour chart, where these lower lows and higher lows, and price just tapped up there. Now it has broken this low point, and now we are there. So looking at this chart, let me see, it's a 15-minute chart. Just want to make sure we're up to date. Okay, looks like we are. So looking at this 15-minute chart, let me move it back to the 4-hour chart so that we have a wider view of what's happening. Okay, the daily chart. So we are right now aiming for this low point with the Fibonacci retracement levels. Really there isn't much of there isn't much to look out for in the Fibonacci retracement levels. But from the top to the bottom, we have a medium point here between the 61.8 and the 100.0. Let me not confuse it. Yeah, so these are the Fibonacci retracement levels from the bottom to the top, and we have price somewhere in between the 61.8 and the 100.0. Yeah, it's almost an equal distance. Let's measure this. That is 320 pips. That's another 320 pips. So that is just in the middle there, and that's where we have our prices right now. We're at the moment on the daily chart. So that's a good area of support for this particular price. So if the Euro USD breaks down below there, we could have some movement continuing downwards, which will be very predictable and very nice. So moving back to these non-farm payrolls, the event will be at 4:30 p.m. affecting the US dollar. So with all those events, there's going to be the average hourly earnings month over month. There's a reduction from 0.7% to 0.5%. So this one is negative for the US dollar. It's an unexpected negative. Then that is month over month. Year over year, it is 5.7% and 5.8% as the consensus. This one is a bit positive by just 0.1%. But it can't do with this. This one is a very big negative, from 0.7 to 0.5. That is like 0.2%, and here 0.1% change. Okay, then the average weekly hours, 34.5 to 34.6. Here there's almost no change. It's a very low impact event. The next one is the labor force participation. Previous figure is 62.2%, and the consensus is 62%. That's a very small reduction in that. Then the non-farm payrolls, the main event, 467K, and expected to reduce to 400K. Then the underemployment rate, that is a U6, an increase. This one is going to increase, expected to increase from 7.1% to 7.2%. Then the general unemployment rate. This one here is expected to reduce from 4% to 3.9%. So all these ones look negative. Just a few look positive, like this one here, average hourly earnings year over year, a 0.1% improvement, just something small like that. So this doesn't give a lot of. The good thing about Forex, if the events are not so good, then you sell. You trade against that currency. If they are nice, you trade in favor. So there's nothing bad if it underperforms or if it overperforms. So looking at the non-farm payrolls, this consensus is 400K. It might be. It's not really positive. This one here. So looking at this, we have a dashboard for the non-farm payrolls. So we can look at the history. These events are all released by the US Bureau of Labor Statistics. So we have a historical chart here of the non-farm payrolls. We can look at the previous. I think it's always good to look at the previous data. They always give you what happened previously with the consensus and the actual figures, and it all comes down here. Sometimes it's a bit so here we are. So this is the historical data for the non-farm payrolls. So this one is for January. That was what we saw last month. That was January. This was December, November. So this being March, we're going to look at the non-farm payrolls of Feb. So that will be the update here. So right now we have the actual price, the actual figure as 467, which was the actual of January. So that is what we need to beat today. Now the purpose of looking at this is to understand exactly what has been happening in the past. So we're having so previously the actual figure was 400. Yeah, sorry, it was 510. Yeah, then this was a consensus, which was 150. Yeah, so the previous figure was 510, and then the consensus was 150. That is what everyone expected. Then it came out of the actual figure as 467. So that was a very big, disappointment to so many people. Yeah, but then previously, before that, we had the previous figure as 647, and the consensus was 400, and it came out even better. Yeah, 510. That was still less than 647, but it was a lot more than the consensus. And yeah, it's a reduction, but not that big, but it was still not so bad. So looking at December and November were really disappointing for so many traders. This one of October, the previous figure had been 427. Yeah, sorry, 424, and the consensus was to expect an improvement of 425, and the actual came out a lot better than that consensus, which was very, very good for traders and everyone who took a shot at this. The actual figure came out as 677. So all those who were expecting the US dollar to be bullish, it was even more bullish than expected. So yeah, if you go through the historical data, you will see how the consensus and the actual figure, how they normally don't tally. So you shouldn't rely too much on that consensus, especially with the non-farm payrolls. It's a very high impact event. It brings a lot of anxiety and a lot of fear and all that. And if you're trading it, you have to be aware of all the facts expecting regarding all these numbers that we are given. Yeah, so you can look at all the previous figures. This one was 710, expected to go down to 647. It came out at 704, which was good. I think the one that disappointed people the most last year. Last year was when the reduction was so big. Yeah? The expectation was so low, and the figures came out. This one of January as well, it was also, it also hit people the wrong way. Yeah, the figure was 510, the consensus was expected to go down up to 150, and there was a big shock there last month. Yeah, so they keep on changing like that. So for the non-farm payrolls, especially during a time of war like this one, anything can happen. You can't be too sure about what's going to happen, but we're going to look at the price movements and point out some areas where price is going to actually be resisted or supported. Yeah, so at 6 p.m., there's the IV Purchasing Managers Index. This one is affecting the Canadian dollar. Yeah, so for this one here, if you have figures above 50, it's okay. There is no consensus here. There's just an actual figure. So even if it is less than 57.4, which is the previous figure, if you get an actual figure that is above 50, then you'll have a good price movement for the Canadian dollar. It will be predictable. Then there is the IV Purchasing Managers Index. So same, this one has the same low as the other. If you have a figure below 50, it is bad. Above 50 is good. And here we have a consensus. So the previous figure is 50.7, and the consensus is 47.8. Yeah, so looking at this one, you can look at the historical data as well, and you get a deeper understanding. Has this been falling all this time? So that we have 50.7, we have 45, 61, 59, 70. So there is a lot of, it's not very stable. Yeah, so we're at 50.7, and it rose to 50.7 from 45, and previously it was at 61.2. Yeah, so there's a lot of unpredictability there, but if you look at the history, it has been safely above 50 for a very, very long time. We have very big figures from 60 up to the highest is 72.9. Yeah, so the figures have been really high. There was just one bad month, which was December, that had 45, and for January it rose to 50.7. So, so there's a very big possibility that even when you have this 47.8 in the consensus, we might actually get a big figure as the actual, because for this particular event, the figures have been very good for a very long period of time. Yeah, if the figures are going to continue moving into the 40s and 30s, then there will be a very big reason for that. Yeah, maybe this time in December was when things started actually going bad, and maybe it's continuing on on the bad side. So if we get something like 47 or something, or 40 something today, then this particular event in the future might have low figures if something doesn't change. Okay, so yeah, I think those are the high impact events for today. Yeah, so the non-farm payrolls is the main event. You can look at more of its historical data there. You can look at the true range. Yeah, small graphs will be loading in there with proper explanations for for all these movements here. There will be the time frame is quite big for all of these events, so you just keep on checking on that. Then the volatility ratio as well, you can move into that and see how to take advantage of that, how to use this information to translate all that data that you will be getting. So this is the true range versus the deviation. Now this one is for the chart, Euro USD. So there are so many charts here. There's USD, JPY, you'll see the values changing, GBP USD. So this will help you to understand the true range versus the deviation. That is all concerning the non-farm payrolls and the affected charts. Yeah, this is Australian dollar versus a US dollar. You can see how different that is. That is USD, Canada. Yeah, so that is the true range in pips, moreover. Yeah, so this is quite it's quite important information for you to follow. Okay, the historical data is there, the chart is there. You can give it a 1 year. You can give it a 1 year presentation there, so it will show us everything from 2022 and a few months in the past. And yeah, so this historical chart doesn't really give you a lot of difference. This one is between the actuals of all these months, how much they've been changing. They haven't been changing too much. The changing has been, it's been quite good. If you look at it in a period of 2 years, you have this point here in May 8th, 2020, where it really moved down so fast. Then in July, it moved out so well. But then, it's been mostly moving in some kind of a range since then. So there isn't a lot of change happening in the actual figures of the non-farm payrolls. Yeah, so the market impact today will really depend on so many things, but you can't leave the war out of it, and you can't leave other factors out of it, especially where the charts are headed. This is the Euro USD. We still have this downward movement. You can take serious advantage of this and profit as much as possible from it. Okay, so let's take a look at some of these charts that are trending today. Okay, the Euro USD selling so much. Yeah, GBP USD still in a very strong bearish movement. Yeah, you can take a look at it right now and see. We just see how it's performing. Oh, we've been looking at Brentwood all along, and Brent crude oil. Okay, so yesterday it was above $122. Yeah, and today it's about $113, and we are moving into the weekend again, and things could really escalate, or things would come out depending on what happens during this weekend. If things come down, then we shall have prices stabilizing, but things are still bad, and prices are still very high. This is crude oil is still above $100. Now it's at 113. This is very, very bad. So This one on Monday we shall get some very good figures, and it will really determine how things will have moved through the weekend. If the war pushed the prices up, then suppression of the war could bring prices down as well. So let's look at the Gbp USD. Okay, maybe just one more chart. Bitcoin, this is the price of every coin. It is now at $41,450. So that is the price of Bitcoin right now. It is still a lot less than it was before. The people who made an investment and didn't come out with a profit, and they're still in losses because they bought Bitcoin at about $68,000. Now it's still, this reduction in price is still very bad, and yeah, the price is now 41,000. I think fundamentally is the only way you can know for sure what's going to happen with Bitcoin. This technical information might not really give you a good outlook on what prices are going to be like on that chart. Okay, now this is the Gbp USD. So following yesterday's, I think it was yesterday, we did some analysis there. The Gbp USD was in that a small, I think it was the 30-minute chart or the 15-minute, it was the 15-minute chart. So we saw this small trend, and we had the double tops and everything there, the whole shebang. And we looked at the prices starting to move downwards based on a Fibonacci retracement from this bottom to that top. And prices have been moving quite well. So prices actually broke all these levels, respected all these levels properly. You can see prices moving in between the 23.6 and the 38.2, moving so well, and then breaking the 61.8 and being resisted at the 50.0, and prices have been moving there quite well as well. And there is now a support level that has been brought up by these two double bottoms, and so these two double bottoms and this other low that give you some significance at that level. You can move it maybe a little bit lower. And another thing that helps is having these these high points moving downwards and these high points moving upwards. They give you a good sense of a continuing trend to continue selling. So price is now below the 61.8. It probably has exhausted all its selling energy. Maybe always going to sell a little bit more from this point of resistance, moving to its top. It's about 30 pips, so you could sell another 30 pips around there. It's a bit slightly above the 100.0, so you can sell to down there if your analysis allows you to. If it doesn't, don't take the risk. So for this one here, it has the movement has really been good. These are today's candlesticks. Fourth, third was around. It's around there. So there's some good movement from the last time that we did this analysis, and for the Gbp USD, in the long run, it is still in some kind of a range market. It's not really busting out upwards or downwards, so be very mindful of that. If you have a trend, you just take a small trend that is in between a reasonable area of price change. So this is still the Gbp USD, and this one here is with the funds. So these are the funds following this trend line, the downward trend. So we have these funds here giving us how price was being projected through this 38.2, the 50.0, and 61.8 Fibonacci funds. And where price is right now, you can see that it's still being contained within these ones. There was a small breakout upwards, and then it moved back into this formation. So we have the resistance up there, we have the support levels down there, another perfect resistance there, another current support, very perfect down there. So yeah, this one here is, you know, showing us some kind of bearish movement that is continuing, but yeah, if any changes come in, shall see how to deal with that. I think these are the charts were drawn for the GBP USD, still using the same analysis from long ago to see where prices are, you know, where you can find an end to these price movements. I think for the Euro USD, there was I was using Elliot waves at some point. I think we shall get to those sometime. I'll try and look for the chart, but anyway, let's take a look at the app and see which charts we can actually analyze. This I've done the Euro USD, GBP USD, okay, USD Canada, and the US dollar versus the Canadian dollar. I want to get that. That chart. And let's see if I can use this one for that Elliott wave theory that we're looking at. So introduction was a Euro USD. I don't think it was, but no, it wasn't the Euro USD. But we still do have, in the 4-hour chart, we have this Elliott wave that can work here. We have wave number 1, then we have wave number 2, which is a bit sluggish, and then we are in the current wave number 3, which is a lot longer than wave number 1, and yeah, it could continue being longer, so we can we can predict that it will move a little bit further. Then wave number 4 will be very it will be very sharp. It will be very sharp, something like that. So if wave number 2 is sluggish, then wave number 4 is a bit pronounced. That's the rule. That's how it normally happens. So if wave number 2 was very high like that, very stiff, then wave number 4 would be a bit sluggish. But that is the law of the Elliott waves. Okay, so we're looking for the US dollar versus the Canadian dollar. There's a lot of bullish movement on that technical analysis app. Yeah, so can start with the basics. We have the point of reversal there, sort of a downward movement down there, and so we have that. Price has just broken the 38.2, and we have good areas of significance at the 50.0. So if price moves the 50.0, that's about 21 pips to the 61.8. It's about 50 pips to that top. Yeah, so we have good price movement in this one here. You can see the breaking of the 23.6 was quite good. It broke above very well. Price was supported there after the break, and we have a good upward movement and some kind of a resistance there, and price has continued moving upward there, which is not so bad. So let's take a look at more charts and see, especially charts of the US dollar. Now this one here, which is a USD Canada, if this non-farm payrolls is good for the for the Americans, then this price, this chart will definitely just it will just move upwards. It will just zoom upwards. All the charts that have the US dollar as the first currency will move upwards. We might have a spike as well, and all the charts that have the US dollar as the all the charts that have the US dollar as the first currency will probably spike upwards if these events are good for America, and those which have the US dollar as the secondary currency will definitely go bearish. So if charts are already in that movement, you could have a very big push either upwards or downwards. For the USD Canada, we have upward movement, so prices could easily move upwards, especially to that 50.0. about 20 pips left there. And if you're selling like in the Euro USD, GBP USD, you could have another push downwards if this event is very positive for the US dollar. If it's negative for the US dollar, the percentage in negativity also matters. If it's not very very negative, then it might be bad for America, but in comparison to another country, it might still be good. So you might have negative figures there, but positive market impact. So if some countries are doing very badly right now, like those which are in that war, then something small bad happening for America, some negative in their events might not really impact them as much as they would have if the other if the other country in the pair was actually performing so well. Okay, so looking through this app, we've just been looking at the US dollar versus the Canadian dollar. There's a US dollar versus a CHF. This one has a very good selling movement. Let us see if there is a... Okay, let's first take a look at this one, USD CHF. So, okay, there it is. So it's sort of a range market. Yeah, it's always good to notice that on the get-go that you're in a range market. It's not an upward market, it's not a downward market. So this one will be a bit of a risk. Let us not waste much time on it. Okay, I think all the charts that have US dollar in them, they are done. But we have the euro versus the Australian dollar. There's a lot of strong sell movement in these big charts, the 1 month, the 1 week, the 1 day, and the 4 hour. And this is quite significant for euro versus the Australian dollar. Let me point that one out. Euro, okay, there it is. Yeah, so this one is, it's very bearish. And looking at this, it's still very bearish there. So, yeah, so here, this one is quite self-explanatory, I think. This one has really gone below. This one has gone below anything we've ever seen before. It has been moving downwards for some time, and yeah, it is still terribly moving down. So its worst performance was at that point. At this point, the euro, it moved upwards there so drastically. That was in 2020. Let's look at it in a 1 weekly chart. Yeah, so this price movement is quite not abnormal as such, but it's something that you don't see every day. Yeah. So the prices of the euros in Canada are really going down there. And looking at this, without drawing any Fibonacci levels or anything, we have prices at the bottom there, and they could be shooting to that level, that support level, which is a 1.37880. It's about 220 pips away. The farthest area is about 980 pips away, but that one is too far. Do not forget that these charts actually represent the performance of countries and their currencies. So you can't really predict and expect a currency to fall so far as down there in comparison to another country. Yeah, it might be wishing for too much. I should always wish within a reasonable range. Okay, so this is a weekly chart. So this chart here is too low. It has gone below all expectations, and continuing to sell might not be such a good idea. Okay, so most charts that have the euro and the pound sterling as the first currency, most of them are selling. Yeah, this is GBP NZD, two nice charts here that are selling right now, GBP NZD and GBP CHF. Let's take a look at both of them. Yeah, so the GBP NZD, this is the sterling versus the New Zealand dollar. Okay, so we have that downward movement as well. So this one is not so bad. It's actually not so bad. We have what looks like a very small trend up there, and we can capitalize on this one and see how far it's going. We actually have a trend moving upwards and a new trend moving downwards. This one makes it a little bit, it puts it into that range of things being predictable. And right now price has just crossed the 61.8. Yeah, so this was as predictable before as predictable as anything. So one thing we can really take note here is that we have a support level just below there with these significant levels at the back. So that's a very strong support level where price could reach sometime in the future, about 100 pips to that point. Then below there, it's really up to you, whatever you want to do. But this level looks like a very significant place to take a profit. That price will, most likely hit that level. So that's a predictability that I was talking about. That's for the GBP NZD. Then the last chart we're going to be looking at is the GBP CHF, selling as well. Should be around here. So there it is. So GBP CHF in a 4-hour chart, we have what looks like double tops there and a break of this resistance, and hence we have could have that selling movement starting to take place, and the equivalent of the pips that are in between there, that is about 320. So you could probably take another 320 pips down there. Looking at the daily chart, we don't really have a well-formed area to mark out as a trend, but it's not so bad. It's not so bad. I think in smaller time frames, this is that's an entire trend. Probably in the 30-minute chart or the 15-minute chart. Now we could have some analysis that can make some sense there. Okay, so we don't really have higher lows there, and that whole setup is not very strong here. But if you look at this 4-hour chart, there's a probability that there will be another rise somewhere there, and that could take place in these very, very small charts. So here's a 15-minute chart. Don't really have anything significant there. Yeah, it's quite confusing, but anyway, that's okay. So let's just take a look at all the others that are selling and buying. Australia, Japan, very nice buying movement. Australia CHF, good buying movement. The Canadian dollar versus the Swiss franc, very nice selling movement there. NZD, Canada, very nice buying movement there. Yeah, I think that says it all for what's happening today. Yeah, so for the non-farm payrolls, look at that historical chart. The event is going to be at 4:30. There will be some good, probably there will be some good volatility that you can take advantage of. Yeah, so these markets, these are high volatility markets. They give you a lot of money. So after you make your money from these Forex markets, you switch your money and put it into the stable markets, like bonds and stock, and very stable markets where you can be very comfortable that you will not lose your money. You just get a very nice broker here in Uganda. You give them your billions, your millions, and they will look after your money so well, because they are, that's what they do. Yeah, but if you're going to trade your own money at a very high risk, then you'll definitely be going into this crypto market, this index market, Forex market, where you can make a lot of money in a short period of time. After some point, one thing you should always remember is the way you trade $1,000. When that money reaches about $100,000, you will fear to trade it. You won't be able to perform when the money is there and the two buttons are facing you, buy or sell. Performance will become, it will become something very difficult. So for that money to keep on making more money, carry it and give it to the brokers here, and they will look after it. You'll be making a very good percentage every month, every year, and life goes on like that. So you can be trading your high risk markets that you can manage, that you know, the money that you can manage psychologically, then you push it off to the others, and they'll do what they do best. So, yeah, so with the non-farm payrolls, I wish you all the best. I hope you make all the profits that you desire, all the profits that that you deserve. Yeah, and you know, if you're going to trade it before the actual event comes out, then do proper analysis, look at the historical data, look at everything that is there so that you make the best decision. With that information, if you're going to trade these events after the impact, that's also very nice. There you'll be a lot safer. Yeah, you may not be the early bird that caught the worm, but you know, you'll definitely catch something, yeah, and you'll catch something big. Yeah, so thank you for watching. Have a good weekend. Goodbye.